All right. Good morning, everyone. Brad Rolkin here with the Fresno Bitcoin and Cryptocurrency Investors Group. Today, we are talking about real estate on the blockchain, fractional ownership, specifically the Lofty platform, because at least three of us have been using it. And if there's some other platforms that we talk about or about, feel free to share those as well, because as we've probably found out in crypto, most of us anyway, if once there's an idea out there, there's 20 other projects doing the same thing. So there might be some other ones as well. Just a little house keeping. Jerry, the CEO of Lofty, was scheduled to join us at 11 o'clock today. He didn't want to come on and kind of overtake the meeting. He wanted us to have a good chance to talk openly about the platform, that kind of thing. He's been very good to communicate with. I confirmed everything Thursday, and then yesterday he emailed and said, hey, something came up, so he couldn't join us today. So what we're going to do is schedule another session, kind of a follow-up session to today's meeting next Saturday at the same time, 10 o'clock. He's going to join us right at 10 at the beginning, and we'll have questions for him. The idea to, today we're going to talk back and forth amongst ourselves and hopefully answer a bunch of the questions. And I'm sure we'll have some that we don't answer. I'm going to make a note of those in the Google Doc, and then we'll have those for him next week. If any of you guys want to request edit access on the Google Doc, I will let you guys add things there as well. And then after we're finished with him next week, he's a busy guy. I don't know, we may get 15, 20 minutes, 25 minutes with him, that kind of thing. Then what I'd like to do is kind of help onboard anybody that needs help getting set up and going with the Lofty platform. Yeah, so that's kind of how the process is going to go. First of all, before we get into it, want to thank Phil with the biggest thank you we can fit through the Zoom platform for bringing up this Lofty on our meeting a month or two ago. I started using it shortly after that and have been super jazzed, super happy with it. I wish I would have known about it before. So Sam, I wish you would have told me about it before. I know we've talked about so many different things. Maybe you mentioned it and I forgot or missed it, because we've talked about a ton of stuff at the pizza meetings. But thank you again, Phil, for bringing this up and sharing this with us, and providing another good topic. So with that, we'll get started. Since Phil, you've had kind of the most experience with it, if you want to kind of just walk us through the platform, what it is, how it works, that kind of thing. Sam, feel free to jump in, and then I may ask questions because I've only been doing it for about a month or so. Phil, if you want to share your screen, that's great. Or I've got mine set up and logged into my account, and I can just, click and as you discuss it, or, whatever you want to do.
Okay.
Oh, I think you got muted.
Oh, here I am. Okay.
There you go.
Sorry. I put some slides together, and let's see if I can share. Have you granted access?
Absolutely. Yeah, you should be able to do it.
All right, let me try that. All right. Okay, let's see here. Can you see my PowerPoint?
No, what I need to do is stop sharing. Hello.
Oh,
Okay. There we go. Sorry about that. Now we're good. Now I got you.
Okay. Can you see my PowerPoint?
Mm-hmm.
Okay, great. So these are some slides I put together. I actually took some screenshots of my account. This way I know everything will work going through PowerPoint. You never know when you go online with a website. It also gave me a chance to block out some private information. So anyway, to start kind of at the high level, of course, there are different categories of crypto. There's payment coins, things like that. One category is RWA, real world assets. And that's where you tokenize some asset and it's on the blockchain and you can, invest in it, trade it, maybe use it as collateral for lending. So that kind of made sense to me. What I didn't realize until I looked at it a little more closely is that real world assets are not just physical assets. They can also be non-physical financial assets, like a bond or something like that. So that was kind of a misimpression I had at the beginning. Here's a little taxonomy slide I just pulled off the web, showing some of the different categories of real world assets. Of course, today we'll be talking about real estate, but I also have some Pax Gold, which is physical gold. And you see that down here under commodities. I'm not familiar with all of the rest of these, a little bit like Maple. Some of these are only available to qualified institutions based on the current regulations. But anyway, at least I know that Lofty and Pax Gold are available to retail. Lofty isn't shown here. I think they have a competitor called Proppy. But anyway, this would be the category they're in. So, of course, when we talk about DeFi and being on the chain, these are not pure DeFi plays, of course, right? Because the asset they're attached to is not on chain; it's off chain. Obviously, real estate, gold is in a vault in London, and so it's not pure DeFi in that sense. Also, you typically have some kind of an administrator in between the crypto side of it and wherever the asset is stored. So in this case, for real estate, it would be Lofty. They're sort of the coordinator in between. In the case of Pax Gold, there is some kind of an administrator. I can't remember their name. So it's really a hybrid, and that's okay. Not everything can be pure digital, but so you just have to get beyond that, because if you're a purist, and everything has to be on chain and decentralized, this isn't going to work for you. So on the other hand, you have someone to call if you have a problem or a question, or so you can reach out to that administrator. Real estate. So what I'm doing, I'm just in the beginning of my journey of learning about crypto here. I'm following the principle I was taught a long time ago, is to test before you invest. So I'm placing very small amounts into all these different kinds of things, kind of seeing how they work. And then when I'm comfortable with it and I understand it, I could put in, a real serious investment. In the case of real estate, that's always been one of the cornerstones of a diversified portfolio. People talk about investing in real estate. I think, Brad, you said you do a little bit of this as a passive investment, or if you earn on rentals. What I learned about real estate is that while it's considered passive by some, it's not passive. It can be a lot of work. You hear about the 3 T's, tenants, toilets, and termites. Well, depending on your tenants and if you have a separate property manager, or if you're dealing with contractors, it can really be a fair amount of work. So if you can, invest in it in a really truly passive way, there's something to be said for that. Okay, so let me go to the next slide.
Yeah, and Phil, can you go into like the slideshow mode, because I think that'll make the screenshots bigger. Like if you hit F5, it should start, or the slideshow at the top.
Let me get rid of that. Okay, sorry.
Yeah, perfect. There you go. Then it's
okay, good. And there are a lot of taxonomies out there. This is just one of them. So if you prefer something else, you can find your own. I was trying to find a taxonomy of crypto in general, showing real world assets as just one category. There's a lot out there, but I couldn't find a good one. So we just started with this. Okay, so Lofty, it's interesting. It does exactly what you kind of want in an RWA for real estate. The interesting thing is they don't advertise a lot. So not everybody knows about this, and you'd think it would be the biggest thing since sliced bread, because people have been talking about this for so long. And so that would be, one question I have for Jerry is, what's his marketing strategy? Because a lot of this seems more word of mouth than anything else. And in order for you to have fair market prices, you really need liquidity for each of these properties. So you have a good bid and ask uh, with the large number of buyers and sellers with all those limit orders they place. And so people have to know about it to do that. So I think he's got everything covered in terms of the technical aspects of it and the legal aspects. I'm just not quite sure about the marketing because I just expect this to be uh, much better known. And I think I only mentioned it to you, Brad, in passing last month when we were talking about something else.
Absolutely. It was kind of off topic, but I'm like, this is a perfect topic because, like you said, we've been talking about it for years. And it looks like, going back, looking through the site, it looks like they launched in 2022. Does that jive with what you've seen?
Yes, it's fairly new.
Okay.
Yeah, so I think they've gotten a lot of participation for something so young, but I think once everybody learns about this, it's gonna, really take off even more. So coming in here, I remember that I had to set up to fund it from my bank account, going through that. What's that third party intermediary that's used with all the centralized exchanges? Does it begin with a P?
Plaid.
Yeah, Plaid. There we go. So I think I had to use that to connect to my bank account. And then to authenticate, it uses two-factor authentication using Google Authenticator. Did you
Mhm.
have to set that up, Brad? Yeah.
Yeah, I'm using
Yeah.
that as well. So that's pretty
Yeah.
straightforward. They're standard, those, like you said, those are standard things we use for other exchanges, and even like Facebook uses the authenticator now. Yeah.
Right. So just to get onboarded, you have a couple little hoops to jump through. But once all that's set up, it's pretty smooth. Um, when you log in and you click on account up here, you go to your account. So this is my dashboard. I'm, you see here, you have the menu on the left. I'm starting with order history because that really shows the properties I purchased. So I just purchased, like I said, test before you invest. I just purchased a token for 3 properties. One of them is a commercial property. So I was just curious to see how that would be different from a residential property. And you can see for this first one here, I paid kind of the standard $50. And then this other one, the market was down. So I got in lower. And this other one was kind of hot. I think it was right in the middle of the season when they were renting. So it was a little higher. But these are the 3 properties I own. See, this was back in March.
Yeah. And just to clarify, when you said the market was down, you're talking about the market for just that specific property, not
Right.
the overall, because each property kind of has its own market for buying and selling the tokens.
Right, and of course I don't know if that market for this property, uh, it was the whole area or that specific property, but you can see we have a commercial shopping center here. I think is in Indiana. This is like a vacation rental in Florida, and this is a cabin in Colorado. So they're in different real estate markets, obviously. Normally, if you're an investor and you're rounding out your portfolio, you would at least put a few thousand into each of these and build it out that way. When I say a few thousand, I mean a few $1,000s. Okay, so that's the order history. So that shows me the properties I purchased. Here it lists them in the assets overview, which is another link. So you can see here's the current value. And this is how much rent I earned. So you get rent paid daily. Of course, for one token, it's not a lot, but if you have a normal size investment, it would be something. Um, Moving forward here, click on balance history. Here's a log of all the rental payment transactions. So you see it's a fraction of a penny every day because I only have one token. But they're doing what they say they do. So they're paying out. this is a link for the wallet. So there's a custodial wallet within Lofty. I don't know if this is the public key or what, but so I just blanked out part of it. But um, this is where the algo is stored, because they use that coin to facilitate everything. There is no such thing, as I understand it, as a Lofty coin. They're just using uh, available coins to facilitate everything. And I'm not clear, maybe Jerry can explain, but I don't know if there's an algo smart contract that actually shows you whole title and how much equity you have, or if he's using it just for the rental payments. So I'm not clear about that on the back end, how that works.
Yeah, well, there's an NFT for each property, and you can see that on the blockchain. So like you said, there's no Lofty token, but there are the Lofty NFTs that represent each property. And
Okay.
and those are the things that we get when we purchase it. And so, like you said, that was well, it's I guess it is a non-custodial because we can get the private keys there, and we could access it from another wallet as well.
So it
Oh, I'm sorry. Oh, shoot, Sam, I think I muted you and you're about to jump in there. Go ahead and unmute.
yeah, it's on the Algorand blockchain, the Algorand blockchain. That's why it's called an algo. So it can always be looked up and referenced. If you go on to the Algorand blockchain and go into their metrics, you can see what's going on there. But it's not going to be in your wallet, because the Lofty wallet is a separate entity than your Algorand. So it's not going to read on Algorand's metrics until it's out of your Lofty wallet. So everything's in your Lofty wallet is kind of safe or excluded from the Algorand network until it's introduced. So, yeah.
Okay. Good.
Yeah. Well, I've looked up my wallet address on an Explorer and saw what I had. So it's basically, if you think of the Lofty wallet as another like MetaMask, but you're using it through the Lofty interface. Not that any of this matters a whole lot, but my point is that you can see your properties on chain,
Okay.
which so at least, can see that it's legit, right there type of thing.
Yeah, I'm planning to go look at this with a blockchain explorer. I just haven't gotten to that yet. There are other links here. For example, there's this one, sell my rental property. I don't have a screenshot for that, but that's really explains the whole process. If you currently own a property and you want to put it on their marketplace and sell some of your equity. So as I understand it, they move your property into an LLC, and then all of the investors become like partners in the LLC. And I think that's how they get around being an accredited investor, and you get this, broad participation. So my focus is more as an investor rather than a property owner. Let's see, what else do I have here? Okay, they have a nice FAQ section with all kinds of categories. Yeah, so that's all I really had for the slides to give an overview.
Okay. Yeah, and there's tons and tons of FAQs. It seems like they've covered every question from 4 different directions, with answers and that kind of thing. Maybe you want to I don't know if you want to do it, or I can do it in my account. There's tons of links to the property details as far as the deeds and appraisals and that kind of stuff, when you're researching each property, before you invest. And didn't you say last time that they even give you more information after you invest, once you bought the particular property?
Actually, and I don't know if I was right about this or not, but my understanding is that maybe all you need to do is have an account. I don't even know if you need to be a property investor, but then you get an invitation to the Discord forum. And then in Discord, you can participate in discussions with other investors. Unfortunately, I'm having a problem getting my Discord account set up. I have a ticket in with Discord, so I haven't been able to do that yet. But aside from that, I think everything else is right there on each property. You can look up the documents with the property valuation report. I know I was looking at one property. It was farmland in New York. I didn't actually realize New York State was 20% farmland. I used to live in Connecticut and I didn't even know that. So I was looking at drone photos, and it was funny because it didn't look like anybody was planting anything. So I didn't go, I passed on that one. But so the information can, work both ways. But yeah, they provide all that there. That was one of the reasons too why I wanted a commercial property thrown in there, because I was curious to see how the documents for a commercial property were different than for a residential one.
Okay. See, Alexander had a question, as far as this only available for the US, or can you do it if you're not a US citizen?
Yeah, I don't know, but I do recall hearing, I think Jerry was saying in one of his YouTube interviews that this hasn't been fully vetted by a regulatory agency yet. So there's just sort of moving along. I don't know if there's going to be any kind of a catch-up issue with that.
It's probably easier if you're not in the US, seems like for crypto.
Yeah, but they're already here. They're doing their thing and they're doing the KYC, and that KYC process, we're used to that with most of these exchanges now, or a lot of them. And it was pretty, it was very easy compared to some other ones that I've done. So I'll just say that it wasn't bad at all. And I initially did my first few properties with a bank, just like you did, Phil. And it took a few days for the funds to come out of the bank and all that. And then I later transferred some algo into my account, and I purchased it right away. But I did notice that, I purchased it like on a Thursday, and it went through, but then it didn't show up as your list of properties until the next day. So I don't know if there's somebody's looking at that, or manually, and they're clearing it overnight or whatever. But it is, when you have the algo coins in your account, it happens right away. There's no delay.
I see. Yeah. And there's definitely like a 2 business day delay in the funding from the bank. So actually that may be a good reason why it's better to have Jerry come in a week, because if some people want to jump in now and get, started and maybe buy a property, they can do all that and have questions ready for them.
Yeah. And I did drop in the chat the link to our Google Doc, and then I'll put it in here with the link to sign up, where you can get $50 when you sign up, and then buy $100 property. I think you get $50 in your account or something like that. Okay, so that was that on the outside the US. Victor had a question about the smart contract, and yeah, let me show that, because I'm gonna have to correct myself a titch. Let me see, is that one? Okay, so this is the Explorer. I'm looking on my account, and so there's portfolio NFTs, and you do get an NFT when you verify. That's actually the NFT. So I apologize for that. But under the portfolio, so I don't know if they're what it looks like to me is each one of these properties, because this has a reference, and there's like the Lofty 0411, 0415, kind of thing. For each property. So it looks like they've created a token for each property, I think is a better way. Well, and like they say, that's what the tokens are going for. So they're not actually NFTs, but they're actually separate tokens.
Brad,
Yeah.
they're minting on demand. They're minting and destructing on demand.
Okay. Now I
So
know when
you want to get a piece of it, then they're going to mint a piece for you to hold. And then that piece will have an association with an address. That's why yours are really close together. So you wouldn't expect that these very different addresses would be Lofty 411, 412, 415. That's people are minting pieces, and that's the mint ID of the piece that got minted. And then the association is with a particular property, and the amount is related to this particular NFT.
So like the 0411 isn't the
That's going to go
property?
back to a contract, a minted piece that in a contract on Algorand on the Lofty chain, and that piece is going to associate your investment with a specific property.
Okay.
Okay. So
Okay.
that piece is the lock. That's how you're going to find it on the chain. And the one most likely. And then the one to the right of that is probably an accounting number for them about the specific asset.
Yeah, let me take a look at these. So this is my order history, like Phil had shown. And there's this one here that I put the order in, and there was some kind of a glitch where they had pulled the money out of my account, but it never filled. And when you put the order in, I did my first 3 as limit orders, and so the order length is for 30 days to try to fill it, and then but it closed after like 8 days, and I'm like, okay, so it filled, and then it said 0. So I ended up emailing them, and they were very responsive, and because I said, hey, I'm waiting for a refund in my account, and they said, oh, you're not going to get a refund, it's going to show up in your wallet. And it was in the wallet later that day. So I think the transaction kind of got stuck or something in their system, but they were very responsive in getting to it. But let's look at the let's see, my assets. I thought, yeah, see, they have that number, but yeah, however it works, it does show up in the on chain in the Explorer as far as that goes.
Yeah, my point was that they're minting the piece every time you buy, and they're destructing that. You're turning that back in when you cash it, right? Or they're trading. You're trading it out to somebody else.
No, you're trading it, because what happens is when the owner says, okay, I'm gonna give you I'm gonna sell 10% of my equity or whatever like that, they put out a certain amount of tokens. So like here
Right.
on this commercial one, there's 8,328 tokens. And so when they actually get minted or not, that's here nor there, but
so they would mint those on demand, and if you traded those around, then you'd have a partial value of that asset of that 10%, which is related to however many tokens they mint based on that value. Okay. And then
right.
when that person buys that back, they destruct them. So they're not an NFT that stays around forever. They're part of a process of ownership. So if that person wants to take that 10% ownership back, I'm sure there's a process for them to buy back out and get their house back. Right. So if I give you 10% of my house, I got to be able to pay you and get my 10% back.
Right. And there's some specifics for that that they talk about. So let's look at one here. This is one I recently bought that it came up in this house in Texas. And so what happens is when the guy says, I'm going to give you 10%, then my understanding is he gets a ton of tokens, and he actually doesn't get the funds until somebody buys them. So this is the open orders for this. So this looks like this is the guy, and he's got 500 or 490 tokens to sell. And so
Gotcha.
this was a relatively new property that got listed. So there's, it hasn't gotten bid up, because somebody, like, once these 490 are gone, then, if somebody wants to buy some, they're gonna have to buy, one from me or Phil or whoever else owns one of these. And then those tokens get traded back and forth, and that's where the marketplace, comes into play. But at this point, when it's so new, this guy has his 490, he just wants to get rid of them, because he wants to get the cash, so to speak. So that's why the thing is pretty flat. So I think he started here on July 2nd, just, what is that, a week and a half ago. So you can look at the order book and see what's going on for there. But what I want to do is scroll down here where it gets into the detail, like, okay, Joshua's selling this, blah, 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 blah. He says he's going to retain at least 10%. Here's the properties managed by insurance policy. Somewhere there's usually, yeah, this location. I always look at this, the location has an A rating based on this niche website. There's a couple other references at the other ratings. And then here's the deed, appraisal, inspection report, and all that kind of stuff you can look at.
Yep.
And then he does, now where it gets interesting is he's talking about, he's paying down 100% of the loan payments, on this $382,000 loan. And so his equity percentage in the property will increase, and the levered rental yield of investors, i.e. us, will decrease over time. But we have the ability to change that via that structure via a governance vote. So actually they've set up like a DAO. So if you look at let's look at the warranty deed. I don't know if this is the one I looked at. Yeah. See, so the grantee, this is the LLC like Phil was talking about that was set up, but it's a DAO, so it's a decentralized, what is that called, Scott?
There's a decentralized autonomous authority
organization. Yeah. Which basically means there's no leader, everybody in the group votes for it. So when you do purchase a property, you're required to agree to the blah, 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 blah terms for that property, which include your willingness to vote when these kind of things come up. So that's kind of how they handle it. Yeah.
I have received an email prompting me to vote for different things where you get somebody who's for it, somebody who's against it. You get all this information and then you vote. Now, my single token probably didn't add much to the final outcome, but at least it's a very democratic process.
Absolutely. Right. So if you have 10 tokens and I have one, you have 10 times the voting power that I do, which is fine.
We operate a DAO in our group.
Oh, cool. Okay.
Yeah. So we have basically it's a club. It's like we're dabbling around to understand how DAOs work and to operate with a multi-signature wallet in a DeFi and trading environments. So that can be very challenging, I can tell you right now. And if you got more than a few people in it, it's definitely like herding cats, pushing rope uphill, trying to, anything like hard like that, you can imagine DAOs are very difficult.
It is like one of the most biggest challenges is getting people to participate, and vote.
Yeah. So you have to have a majority vote because, you have to create bylaws. Our bylaws say we have to vote. Our vote says we have to be majority. And so we only have a 3 of 5 or 3. Yeah, it's a 3 of 5 signature process. And we have 5 people on the multi-sig wallet. And then we have more members that are not on the multi-sig that have voting power based on their holdings. So it's now that's people that are in a physical we're
proximity.
geospatially located. So I can go over to one of these people's house and knock on the door. I can call them on the phone and say, hey man, we sent you something you haven't been paying attention to. But actually getting people to vote in a timely fashion or even getting multi-signers to sign in a quick fashion can be a challenge.
That's what they seem to be pushing there. Let's see. Richard had a question. After you buy a token, can you see the ledger of the rental property like a maintenance? Give me a little. I'm not quite understand. Are you wanting to see the ledger like the property manager is keeping? Is that what you mean, Richard?
I may add more details about this question. For rental property, the investment return is related to the ledger, how much you cost and how much income you get. And the ledger is very important. You can see what the details about the income and the cost.
Right. Okay. Okay. That's where I kind of thought you're gonna. I did find some of those that had, let's just say, interesting data like that. Let's see if this one does. Basically, when you scroll down here, yeah. So this one, talks about the operating reserve is below half full. Owners voted to apply 100% of the cash flow to reserve or to replenish the reserve until it's half full, and then apply cash flow back to the investors. So there's that. But what I've seen is things like, here we go. Here, property updates. So this was from June 21st. There's all these, just little notes. The tenant made a payment, blah, 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 clearing their past due and eviction fees. So whenever something basically happens, they talk about it here. There's, a tenant reported the presence of roach droppings and feces on cabinet hinges. So they're saying there's 42 hinges that require replacement. So this, this is some serious detail. I don't know if this is what you're looking for, Richard, but when I saw this kind of detail here, I was like, holy cow. So here, cabinet repair invoice and photo. Let me click on that and we'll see what that has. I mean, the gist of this is that you can see what's going on with the property, which, like Phil talked about, is maybe not as passive as we want, but at least it's available there that we can see if we want to follow along that much. So here's an estimate to replace those door hinges. Here's maybe I don't know if we want to see the pictures. Oh, maybe these are the finished ones. These are the bad ones. Yeah, see, this is probably more than I wanted to see this morning, so I'll spare everybody else the details there. Get me out of here. Get me out of here. So yeah, there's quite a bit of detail we can see on the property. So I think that's nice.
Yeah, that's nice. I'm wondering, do you have a dashboard? Like after you buy the token, you get a dashboard about the property, like how much reserve in for the property, like and the cost, the income numbers about it, like for the past year.
Well, let's look at mine and see. So here's, let's see, the one I've had the longest is this one. And one thing I did notice, Phil, I don't know if you noticed it looking around, in Florida, there is a gentleman that probably has 5 or 6 properties, kind of, nice, newer single family homes. And so when I saw that it was the same person, this, like, I don't know if this is the one or somebody else, but what I noticed was that this one guy had multiples of them. And so I chose not to invest, I think, in any of them. Or maybe I was thinking maybe I would do one, but I didn't want to do multiple with the same owner just from a diversification, because I felt that reduced my diversification, even though they all had good returns and that kind of thing. Okay, so Richard, is this is kind of what you're looking for on a property once you own it?
Yeah, like after you own it, do you know like how much income the property has and how much cost?
Well, they showed me there was one on the previous page. It said your rental yield. So this is what I've yielded so far. Like Phil said, we get rental payments every day. And so this one I've had, I don't know, 2 weeks or something like that. And I guess they calculate this based on what time. Yeah. So you could, calculate that yourself, but were you talking more the expenses, like replacing those door hinges or a new water heater, that kind of thing?
Yes.
Yeah, that's going to be down in the, what do they call it? Property update. Lofty. So here, yeah, here's all. Yeah, so I don't see any kind of property update on this one. So I don't know if they maybe they haven't had anything going on. Usually it'll talk about if there's a current. Yeah, so there's a 2-year lease in place. Other ones have talked about the lease is ending in 3 months and the tenant doesn't plan to renew, et cetera, this kind of thing. Yeah, see here, okay, here talks about the tenant loves the house, currently engaged in credit repair. She would like to renew the lease at this amount for an additional 2 years, during which credit, and then maybe she wants to purchase it down the road, that kind of thing. So it looks like this one hasn't had many issues, where that other one was, I think, a duplex or a triplex. And so probably a little more issues with those types of tenants than this house that's, was built last year. It's pretty, not a lot of problems going on with this one, hopefully.
Okay, I see. Yeah, I'm also curious, who will start the governance vote process? Like, what kind of topic will start the vote?
As far as like to put a property on the platform?
Oh, I mean, after you buy this property,
okay,
after you buy the token of this property, you can vote for something, for some topic, like if decide to sell this or something like that. And I'm wondering who can start the governance vote.
Oh, I'm not sure. Phil, do you know who like would instigate the governance process if something came up? Or
Well, there's
would,
if something came up. I mean, if you look down in the documents below where you were scrolling, I noticed there's a quitclaim deed. So if the owner died, it sounds like there's a process to take over from that. There's also I read somewhere there's an attorney assigned to every property to handle the governance process if the owner walks away or dies. Remember, every property has a property manager, so they deal with the daily issues.
right. Most of the ones I've seen on these newer single family houses, it seems like the owner has been managing it themselves. Which, if they still own,
Brad,
70% of it, then that's probably okay. Go ahead, Scott.
it's got to be in their terms and conditions for the people who put properties up. There have to be responsibilities for them for certain kinds of maintenance or management that either have to be assigned to a property manager or assigned to them. And if they don't fail to meet their terms and conditions, it's unlikely there can be any governance vote to change the conditions because they're meeting their end of the bargain. You're a fraction of a party that Lofty is really the entry, and then the LLC becomes the holder after the fact, and the terms and conditions and operating and all of that are all predefined. So my guess is that your hands are tied as far as trying to change any of the conditions unless they fail to meet some kind of requirement.
Okay. I hadn't seen this before. Let's take a look at this public identifier smart con.
Yeah, look under management, section 8.
Oh, algorithm is managed.
That's interesting. So it is a smart contract.
Yeah, let me see if I can open this in another window and then I'll copy it over because I can't seem to copy that link.
May I ask a question?
Please.
Yes, I'm wondering where can we see information about this smart contract and what blockchain network it belongs to?
This is on the Algorand chain.
You can use the Para Explorer. Just go to Google and do Lofty.ai blockchain explorer, and you can find Para. Para will allow you to search. It's a chain explorer.
Yeah.
For algo.
If it's an Algorand network, I can go to the Algorand Explorer, and where can I
Well,
get an
it's
ID?
not exactly algo. It's like a subset, and it'll be compatible, but I don't know how well the explorers work. What I'm saying though is it is on chain, and you can chase it through an algo. So that very well could work, and it might not, but I know it works on Para.
So as I understand, the ID of the smart contract is on the top of this page, right? LFTY0411. And I can pick up
No,
this this
That's
ID?
no, that's like an ordinal. That's like an ordinal inside of the contract. Okay. You need the contract address. So the smart contract would have an actual contract address. And I haven't gone and sleuthed that, but I suspect that they don't publish it because it's hard to understand and you just have to go find it.
Yeah, I'm just wondering from technical perspective. So how can I see the smart contract?
You need the contract address. At that point, you can access the contract.
Yeah, and where is the address line here?
We
That's
don't
what you gotta
know.
go find.
Yeah.
So
Yeah.
if you go onto the app, there's a button, a question. If you want to find your specific smart contract address, they will be able to send you a link, but they're not going to have it just out there. Really no purpose for that information on the web.
Yeah. Now there's one that I'm looking at here, and we've got the asset. If you look at the link up here, it talks about circulating supply. So this seems to match the number of tokens on.
But usually this information is available in the smart contract.
It should be public information in terms of transparency. So might say that there's no good reason to have it out in public, but there's every good reason to have it out in public. Contract addresses allow you to audit contracts, allow you to understand what you're getting involved in, allow you to understand the risks and the rewards of being involved in a particular project. And it is definitely a red flag to not be able to review a contract. So you would want to work with them and ask them if there's a reason why they're not forthcoming in contract addresses for all of the properties and all of the things that they're invested in.
But as I understand, the smart contract itself is executed on Algorand blockchain network. Am I correct?
They are executed in the Lofty's subset of Algorand. They do it's like a token issue thing, and then they run like a Algorand compatible. It's not a subchain, but it's like it's not.
It looks
exactly,
like it's like a token for each property. So this one, the 18,352 circulating supply of this unit name, that identified it, that matches the 18,352 there that they talk about that are out and available.
Yeah, and see, those are running on a side. So when you go and explore it, the main contract will be on Algo, and then the subs may not be all directly on the Algo chain. You have to look at how they implemented it. Kind of like there are other chains that do this, like Cosmos, where there's connectors.
Okay. Yeah, I put this down as a question for Jerry for next. I don't think we're going to get too much further here, but let me bring up this other one that I was able to find. It's the tab.
As I understand, because of security reasons, you have like a pattern for the smart contract, and you copy this pattern and just change some information inside it. Just like you have a basic contract, and for each token, this pattern will be applied. Is it so?
And these are not tokens. They're you have to more think of them as NFTs. Everything's an NFT. It's not a token.
Yes, yes, and but they are issued for a property, and then they're like they call it a token underneath. So that means your contract may be using another contract to instantiate this particular contract for a specific property. And then that contract has the ability to show ownership of the tokens as they move around, as they go to different owners. Then you have to have that list like an NFT contract. Your wallet address is inside the contract saying this is where your asset is ownership lies. Okay. And that's there's not necessarily the main contract that you're looking at. Those can be controlled. You'd have to read that contract, and you'd have to know how to read it, and then you'd have to say whether or not it's manipulated by another contract. You have to remember that these guys require all the different kinds of tools that a bank would have. They have to be able to freeze the account. They have to be able to claw back the asset. All those different kinds of things have to exist in these contracts. So these are not like a normal ETH NFT minting contract. They're more like a government regulated contract in some ways. Although the government's not doing it, they have regulations that have to be implemented. Does that make sense?
Yep, makes sense.
So I suspect that all the contracts for individual properties are extremely similar. And I also suspect that if you had the contract address for one of those specifics, that you could read it or understand it, and then you would know a lot about how that contract operates on individual properties. But if it's if you're looking at how does Lofty operate and how do they run it, they're going to have control of those. That's the one that's going to have the governance, the ability to remove that contract from activity, to move the assets to another location. Those are all things that are going to happen through that upper level, not at the individual property contract.
Okay, before we get too far off of this, are there any other questions that you guys have that I can make a note to ask Jerry next week? You know, it sounds like we want to be able to see the smart contract address for each property.
I'd like to understand what's the relationship of the individual property contracts to Lofty's, and is Lofty's tokens control those contracts? Is Lofty, who controls those contracts? Is it another contract, or is it management at Lofty because they need to have some oversight or some human in the process because it's real estate? You know, I don't know what those rules are. That's probably more your bag than mine, Brad.
Okay. No, but that's a good question. So let me do that. What's the relationship between Lofty and the individual property?
I know there is a layer of control between there, because I had someone hack a wallet and early when Lofty first started, and my wallet was at another account, and the Lofty was able to still give me the account or the information that was in my lost wallet. It still kept giving me my
rental
daily
payments.
rental payments.
Yes, they ultimately control the entire system, and what they did there is clawback. They have the ability to take it back out of that wallet because of the way the contract is written. Okay, so one of the things that your Social Security payment or your government payment comes with a clawback. They could come pull it back out of your account if they want to in the traditional banking system. If it's there, they can come get it back. And that has to be possible for things like real world assets. This is one of the big challenges for the whole not your keys, not your crypto mentality of crypto, combining with things like real estate, because if you hack my wallet, you ain't coming to my house. I guarantee you, you're not moving into my house. You can hack the wallet all you want, but I'll be here. So they have to have processes that fit with government regulation. The government has to have the ability to eminent domain seize the property and all kinds of weird things like that. So the contract is not the top level. The top level somehow lies with people.
Yeah. Okay. So getting back to this link that I put in here, Phil, so this smart contract, it looks like for this one property, the 0412 property is this. And so it says, okay, it's created by Lofty.algo, which, oh, so that's a link. What does that show us? Okay, so this is more like the organization, assets held, it's created. Okay. Phil, do you have any other questions based on this public identifier for the smart contract, which led us to here?
Can you click on transaction?
Right here, yeah.
Yeah, that wasn't my question. I think you confused me with someone else.
Oh, okay. I apologize. Yeah, I'm puzzled that there's so few transactions on this.
Can you click on the type code to see what is the code mean? Yeah.
Is the receiver your address?
That's yeah, I mean, there's some other identifier that receiver, that app number.
Well, it went there. Is that you?
Wait, you mean this app number?
Yeah. That we got from your property, right?
Yeah, this
So
is one of the properties, and then this is the
if
number.
you bought 3 pieces and there were 3 transactions, and they all went to your address, that would be your address.
Yeah, but no, this number, from what I understand, is part of this DAO.
Yeah, but
for
like
the
if
property.
they're filtering, if their process is filtering to only show you yours and only show you your transactions somehow, then if you notice, the receiver over there is the same number.
Yeah,
Okay?
no, right. I get what you're saying, but these all happened 2 months before I bought any of these properties. So maybe this is related to a DAO vote or something.
Maybe it's the owner of the property who listed this property.
Yeah, it looks like it's tied to the LLC.
Yeah, it could have been issued to them, and that's the address that becomes the contract that you interacted with. That could be.
Okay. Yeah, so this is we can get way technical here. I don't.
Chain exploration is a challenge all in itself.
Oh, for sure. Let me check with my friend Lino. I know, Lino, you're not going to get as technical, but you're going to have some good questions about how we can make money. Do you have any good questions about that?
Yeah, the one I was more interested in, how do you actually list the property?
You want to make money on your property. Yeah,
yeah.
Did you go through and
I haven't logged in yet. I know you sent me the link and everything. I will, but I haven't did it yet.
Okay, because they've got this whole sell my rental property,
right,
blurb there to do. So yeah, check that out. And I mean, like I said, they seem to have FAQs for everything, because I did some Googling and it's like half the results were FAQs from Lofty kind of thing, and then others were like forums and that kind of stuff, but they do have a ton of stuff there. So
got it.
Cool. Okay. Let's see. Oh, Susan, you're gonna have a good question for us. What do you think of all this?
Oh, it's very fascinating. And I was more interested in the sell side too.
Okay. So
I was glad to hear the question.
You and Lino might have to form a little subcommittee on selling your property.
Oh, it's fine.
No, that's good. Good. Okay. Any other questions on how it works?
Oh, one other quick comment, Brad.
Mhm.
It's interesting because there are so many properties, you can't own them all, right? Unless you're a gazillionaire, is how you select a property. And it's interesting
Okay.
because some of if you're going by return, some of the best return properties are not A properties, and which I think if somebody who knows real estate doesn't realize, it's a lot of the A properties are more about capital appreciation and not so much about rental return, whereas a B property may be stronger on your returns, periodic returns, and not so much on capital appreciation. So it's kind of interesting as you go through them and see the projected rates and look at the property, you kind of get a sense of that in some cases. So you may not necessarily pick a property that you would live in. I guess is what I'm saying.
Absolutely.
That's how you're approaching it. Another thing I was thinking of, and I don't know if this would fly or not, but let's say you have a substantial amount into one property, $5,000 or $10,000. If you pick a property in a geographic location that you normally travel to, either because you have family in a different state or you like to vacation somewhere, that might be an angle for a tax deduction. Because I think if you're visiting an investment property, you can deduct the portion of the trip that you allocate towards business. So if you like to go to Disney World every year and you buy a property in Orlando, and you travel, you might, and you have enough money in it that the IRS would look at it and say you're a real investor. You might be able to deduct part of your travel expenses, and because you say you're visiting that address, you're an investor in that property.
Yeah, I think that's going to fly a little more when you own the property, as opposed to a fraction of it. But like you said, you owned enough of it,
Right.
kind of thing. Now I noticed this one in Atlanta is kind of like a cool condo overlooking the city or whatever. And because I had looked at that as one, and I think a week or two ago, these projected numbers were much higher. So I don't know. Let's look and see if something changed real quick. If there's any. Oh no, that's older. Huh. Yeah, so you can select, you want your, return to be at least 10%. Types of properties, and then areas that they're at. I mean, they're breaking them down to the city, not just the state, which is, kind of crazy. Because some of these we might not even know, Palm Coast versus Florida, that kind of thing.
Some other questions for it.
Yeah, well, let me just one thing. Somebody had messaged me in the deal asking about, saying would it be easier to invest in a REIT? Which, yeah, it would, but this gives us the ability to kind of pick and choose a little more. So, a little more active investing as opposed to just throwing, 10 grand in a REIT and seeing what happens there. But that's definitely on that, on that same spectrum. Go ahead, Scott.
Yeah, so I was thinking about what your downside and your risks are associated with these, and I'm not real familiar with real estate investing, and this is a little bit different. So my questions would be around, like, does this track along with the same kind of risk that would be if I was in a REIT or if I was in an LLC with a couple of friends owning a rental property in a nearby city, something like that? So how are they handling those, and what is the exposure that you have? Because what if I'm a $500 investor, so I'm not a big investor, and a hurricane comes through and flattens the place to the ground? Is there more than my investment at risk in some way? Do I have some skin in the game that goes beyond that? I'm kind of curious how they handle that.
Yeah, I don't know specifically on that. They do list all the insurance policies as far as that goes. It might be the case where there's a $10,000 deductible, and so they're looking to the, all right, you own 0.5%, so you put 0.5% of 10,000 to pay the deductible or something.
I don't know what that looks like, because like I said, I'm
Yeah.
not really like deep in real estate, but I wonder if their risks are well aligned with real world risks that I would have if I was in a similar situation without a crypto.
Yeah, that's a great question.
I would think in generally, yeah, be very similar, because like Phil mentioned, you know, we're part like members of that LLC that's formed for each property. Now, compared to the REIT, that's, I mean, there's like no risk there from the standpoint that we're one of thousands of people in a, you know, in a REIT. But compared to like if you and 3 friends went in and bought two houses, like you said, in a neighboring city or whatever, through an LLC, generally your limitations are limited by your loss of equity in that LLC.
Well, you know, your limit, the negatives or your cons are basically, as a normal investor, it's not as low as a REIT, but it's not as high as you doing it by yourself. So your cons is if you're renting anything, is the loss of your the person who's occupying. That removes the income. So that's one of the downsides when you're going to look into getting any property, is that you're going to actually have to think about if someone wasn't in it, because then all the percentages go down, especially if there's a multi-unit apartment or property that you have. They're not all full. So then the percentage that you were supposed to get is not going to be the percentage. But the other thing, that since it's LLC, it limits the loss and everything is insured. So there's no outside risk outside where you're going to be on a hook for thousands of dollars because the hurricane came, the thing blew down. Now, if you want to rebuild and you're going to add to it, the Dow going to ask you questions of how you're going to do it.
Yeah, that makes sense. Yeah, I was kind of thinking, you know, after Katrina, it took years for some of those neighborhoods to get rehabilitated and to come back to life. And I could see having an investment in it, and I know that the investment could be lost, but wonder what, you know, what beyond that, or whether it works the same in Lofty. You know, does Lofty say, well, we walk away and then whatever asset? I don't know. That's why I'm saying, does it track the same way or very similar to the way it would operate if it was a real life scenario? That's my question.
Yeah, that now, like when he brought up the Dow issue, say for example, one of these blew it down in a hurricane, it was, you know, a total loss, and the insurance company says, okay, you know, here's a check for $300,000 to rebuild. Maybe the Dow says, okay, do we want to rebuild and each kick in another $100 or something, you know, to cover your percentage or whatever? Or do we just distribute those funds and everybody walks away and somehow there's the parcel that, you know, the vacant lot that's left, that kind of thing.
Right.
But the way I look at it is, when we're doing this, we're partnering with somebody that has experience in doing this real estate thing, where, like you mentioned, Scott, if you and 3 buddies went in and did it and none of you had any experience, you're kind of all on your own. Now, maybe, you know, you have a friend that's real experienced and he recruits the 3 of you to go in on a couple properties. That would be safer for you to go in with him that has experience than doing it, you know, on your own without experience. So I kind of look at this as a similar thing where you've got somebody experienced and we're just kicking in, maybe we have, I have 1%, Phil has 1%, Sam has 1% of a property. If we were going to kick in, I don't know, what, $2,000 or $3,000 a piece type of thing. But since they talk about they're always going to keep 10%, they're going to still, has that skin in the game. The one thing that I did notice that was a little off-putting was that there was one where they had an agreement to purchase back like all of the shares at a 20% increase in 2 years or something like that. Where I'm kind of thinking, well, wait a minute, I've been in this property, I own 1% or whatever, and then in 2 years, maybe I want to keep it. But in this case where the deal was that he's going to buy it all back at a 20% increase, then I'm kind of out that ability to hold on to it. Where if, you know, me and Scott and a couple other people went in to buy, we could, you know, choose to keep it for longer. So look, when you're looking at the fine print, you know, see if there's anything like that on some of those properties.
Yeah, and not a lot of these properties has cash reserves. If you look at some of the metrics on it and some of the things, if it's fully rented, they'll have cash reserves in case of some kind of emergency, contracting and stuff like that. So you have to pay attention to that when you're buying properties also.
Yeah, like we saw, there was a few where they had used their cash reserves, and through that DAO, they decided to put all of the rental income back into the reserves to build that up. Because what you don't want to do is be short, you know, 5 or 10 grand in reserves. So if a problem does arise, you want to be able to fix the property so you can keep it rented. If you can't fix it for 5 months, you're out 5 months, you know, worth of rental income. So that's why that becomes and is important.
Yeah, the one vote I was mentioning previously that I had to do was proposed by one of the other investors because they had excess reserves. So they were voting to give it back to the investors. I think ultimately the vote was to keep it in the reserves and say in case some large unexpected expense came up.
Okay, then were they going to adjust the reserve percentage going forward? If, you know, instead of putting 3% away for reserve, maybe put 2% or something like that?
Yeah, I don't recall that. No, I think they
Okay.
just like the fact that they had this big cushion.
Yeah, makes sense. Makes sense. And then down the road, a year or two, they could always vote again to distribute those reserves. You know, because like if it kept going, like they kept increasing, which would be a good thing, but who wants to have those reserves? You know, I mean, it's like $20,000. You know, that might be overkill. Who knows? But
Yeah, and maybe the owner who proposed it was planning to liquidate anyway, so he might have wanted to get as much out as he could. Who knows?
yeah, but at least we're part of the vote, so it's not just like, hey, they decided to do it, you know. And yeah, if I only have 1 token, Phil has 2 tokens, our votes are minimal, but at least we can be part of that process.
Right,
So,
and if
cool.
you're actually thinking about becoming a direct investor in physical real estate, not going through this online process, this is a great way to learn a lot about the business, kind of in a low risk, low investment way before you take the plunge.
Yeah, so in that case, you might want to buy one of these more questionable properties that has all the issues, you know. And because whenever you have skin in the game, you're going to pay attention more. So you buy one of these triplexes that has all the roach problems, and you get these notices about this and that, and you're like, oh yeah, some of these C properties, like you're talking about the A, B, and C properties, you know, potentially has these kind of issues. And then you're aware of it, compared to the 1-year-old single family house in Texas or Florida that's, you know, basically has no issues, kind of thing. So yeah, good point. Okay, any other questions we could put on the list for Jerry for next week? Sounds like we're kind of skewing those towards kind of technical ones. Any other investment percentage? You know, why do the percentages change? What, you know, those kinds of things. You guys think of anything along that line?
I guess going back to what I said earlier, I would just be curious to know what his marketing strategy is to pull in more people, because the more liquidity we have in the order books, the more efficient these prices will be.
Yeah. Now, do you want more investors or do you want more properties, or both?
Well,
You want a more active market.
yeah,
You want more liquidity and you want more trades so that you can buy and sell when you choose to. Correct?
exactly. Just like with a
Yeah.
stock.
Right. So yeah, so let's look at one of these that doesn't have very many. It's 200. Oh, maybe they're sorted by, let's see here, 217. This one. Let's see what the order book actually looks like. Because if I wanted to get out, so yeah, if I wanted to get out, I could sell for $25, you know, which if I got in out, these guys are saying it's worth 49. So yeah, it looks like maybe this one had problems. So people were like, I'm getting out of here. And this guy's like, I'm willing to give it for 30. But Phil, are the rental yields based on buying it for $50? Because that's where it gets interesting. Because because there was one that I paid, I think $66 or $67 for, and it was maybe a 21% return projected, return. But then if I overpaid by 20 or 25%, obviously my return is going to be lower if the return is based on a $50 token price.
Right. So I don't know how they calculate the rental yield if it's done dynamically based on either the last purchase price or the current order book bid or ask. I don't know.
Yeah. Okay. That'll be a question. Okay. Because when that happened and I got, because when that happened, then I'm thinking, wait a minute, what do these yields mean? So then when I wanted to invest it with one more using the token that I already had in my account, that's when I went after that new one, and they were, it's the guy getting rid of all of his tokens at $50. So I knew, okay, I'm not going to be overpaying, so to speak. So.
But unfortunately, the order book for this is not deep at all, right? This is a very thin market.
Exactly.
And so I'm thinking the only way you get more interest is to have more people signing up for accounts and understanding the whole process. And that's really a marketing strategy.
Yeah. So if you had double the number of investors with the same amount of properties, theoretically, there would be more activity. It would be more liquid because there'd be more trading. But if we double the properties and double the investors, we're kind of where we're at now.
Right. So and also you can get some really weird prices, right? If you don't have a lot of buyers and sellers. Yeah, if you want efficient pricing, you need to have a liquid order book.
Yeah. And I think I realized that when I looked at the order book and I said, oh, I'm glad I didn't put in a market order, because I looked at it and some guy had his trade in, like instead of being $50, it was like $672. I'm like, oh, if I would have put a market order in, I would have paid 72, even though the last trade like was 40 or something like that.
Exactly.
Kind of thing.
Which is another general lesson. Try not to use market orders anyway.
Right. Yeah, unless you look at it and go like the one guy that he was just selling off all of his at $50. That was easy, because I wasn't sure how long a limit order was going to take. Just like we're talking, there's not that much liquidity, not that much action, and I didn't want to have my order tied up, and I didn't see a way to cancel it. So I'm like, oh crap, now I've got $200 tied up for 30 days. I mean, that's not a big amount, but like you're talking about, you're just learning with a small amount, and I'm doing the same strategy. So we're in the same boat there.
I have a question. It might be really stupid, but so you're paying in dollars and not Bitcoin?
Correct. It's pretty much in dollars, like Phil had done and I did with my first three. I put the order in and I funded it with my bank account, in US dollars. So it's $50 and there was like a $2 fee or whatever, and so it was $52.
So if it's on the blockchain, is it possible to use your currency, your blockchain currency?
Yeah, and you'd use algo for that.
Oh, I see. Okay.
So like right now, if I look at my wallet, I have it in my, I've got a Bank of America as well. So in my Lofty wallet, it shows the property and then the crypto. So I've got $12 US in algo, and then this much actually in USDC, stable coin.
I see. Okay.
That kind of thing.
Okay, thank you.
Sure. No, good question. So yeah, if you had Bitcoin, you could exchange Bitcoin to algo move algo into this wallet and then pay for it that way.
Okay.
Yeah,
Cool.
Bitcoin is very expensive to pay. Algo is more appropriate.
Okay.
For transaction fees and that kind of thing. And
Yeah.
that was one thing
Yeah.
I read somewhere or something where, you know, algo is very low transaction fees, because when they're giving us those rentals every day, is it balance?
Yeah, balance history.
Yeah. Yeah. So like I'm getting the same, you know, 8 cents a day, 4 cents a day, you know, whatever kind of thing. You know, I don't want to be paying 10 cents transaction fee on that.
Yes. Okay.
Yeah, good, good.
Thank you.
Okay. So hopefully everybody has that link. Any other questions on before we do the next meeting next week? Last minute things to add. If you email me or post it on the in the page here. If you have any other questions, you can post the comments here. I'll post the recording later today, probably. I'm kind of headed out of town shortly, so it's going to be not my usual schedule, but we'll get that posted. And so, yeah, again, next week after Jerry joins us, then if anybody's interested, we'll spend time just going through the process, and you could share your screen and, hey, click here, click there, this is what you do, that kind of thing, if anybody wants kind of that extra help getting set up. Cool. All right, any last minute questions? Think we're good?
Will the next meeting be on Saturday at 10 a.m.?
Exactly, same time, just next Saturday starting at 10.
Okay.
And then we'll kind of go as long as we need to. I mean, within reason. But Jerry will join us right at the beginning, and then we can go through and look at properties. But I want to, if anybody has questions or issues signing up or transferring their algo into the account, things like that sometimes are roadblocks. So I want to help people with that if they need that. Good. All right. Thanks for joining us. Thanks again, Phil, for bringing up this topic a month or two ago, whenever that was. And I will see you guys in a week. And then on the following Sunday, we have our in-person crypto meeting at me and Ed's as well. So that'll be a full crypto weekend next week.
Hey, thanks, Brad.
Thank
All
you.
right. Take care, everybody.
Yeah, good weekend.